Amir Adnani, thanks so much for joining us on Wall Street Unplugged.
What a timely and almost historic time to connect. Historic in my world, Frank, because my world is so much about uranium. Today's a bit of a historic day, so I'm glad we're connecting this morning.
And historic because, for selfish reason, I called you yesterday because asking you about a couple of things about Curzio research and things we're going to do in the future, which you have a lot of experience with. And next thing I know, we just started having a conversation on uranium, and you said something that was very interesting. One is that we're going to be 6-year highs, right? 6-year highs we just broke out. But you said that, and I don't know if I'm quoting directly here, but you'd never been more bullish on this market since pre-Fukushima. And once I heard that, I'm like, you know what? You should come on. We have a lot of people that own uranium. We're seeing this breakout finally on positive news, not some speculation or anything else. Let's start from there. Why are we breaking out here? What's going on with the markets?
Well, really two things. I think the two Achilles heels of the uranium market or uranium investing for as long as I've been in it, right, has been number one, the fact that the sector's just hated. People just hate this sector for some reason. Maybe it's because of the nuclear accidents in Fukushima or Chernobyl. But for the first time, and because of the fact that we're seeing so much greater concern being placed on decarbonization and just the need to really address what's happening with reducing global temperatures, that we're seeing a serious embracing of nuclear power. And the sentiment shift that if you're an ESG investor, if you really are focused on recognizing that nuclear power has these incredible attributes that should have been recognized all along in terms of its ability to generate enormous amounts of emission-free electricity, that's getting registered now more than ever before. And so that was the first problem, was just the fact that sentiment about the sector, I think, was always so bad. And the other issue about the sector all along was how opaque the physical uranium market was. And a bit of a trade by appointment type of market, Frank, mainly because the utilities who buy uranium to consume uranium to generate electricity, they're not trading it every day. There's no daily price discovery. They like to come into the market, buy a whole bunch of uranium for running their nuclear fleet and go back to their offices. And over the last couple of weeks, we've seen the development with the Sprott Uranium Trust, which I think is a game changer. And it's a game changer because Sprott introduced a very innovative structure here. And you got to remember, the Sprott team and organization, these guys are commodity experts, right? The firm was founded by billionaires Eric Sprott and Rick Rule, and they are very focused on commodities. They have a silver trust, they have a gold trust. In terms of physical entities that buy and store and provide exposure to investors for that commodity. And now they've taken over the management of uranium participation, and they're running it the Sprott way, and they introduced an ability to buy physical uranium on a daily basis using an at-the-market equity program. Well, we've never had something like this in the uranium market before. In the 16 years I've been in it, we've never had a structure like this. And in the 45 years existence of the uranium market, there's never been a structure like this where you've got daily price discovery. And they launched this literally 10 days ago. And the uranium market and the uranium price has just come to life. And we're talking about this being really the dog days of the summer, like end of August, who's around. Yet the uranium markets moved from $30 per pound to now $35 per pound just this morning. Daily purchases by the Sprott Physical Uranium Trust. And that combined with the first point I made about the sector going from just being totally hated to now starting to get embraced and recognition from ESG investors, I think there's a really potent 1-2 punch there, Frank.
Yeah, and I'm going over this now too, and just showing this chart of how you broke out now. Could you explain, because some people might not understand buying the physical and how important that is, and maybe the amount that they're actually buying, and how this is influencing prices? Because it all sounds fine and dandy, and people are used to seeing daily price discovery, but you don't have that. It's great that you mentioned that, but what amount are they buying? I know that it's an amount, like hundreds of thousands of pounds daily? How do they do it in terms of, are they just easily raising money with it? So many people believe in this strategy. It's almost like buying oil when oil prices, whatever it was a couple of years ago, not even a couple of years ago, 2 years ago, right? When we were storing it, right? Because it went below, a couple of dollars for oil, and everybody knew it was going to go a lot higher. And now look where it is today. But they were able to store it. It kind of reminds me of that, where you see such a big disconnect. Hey, this makes the most sense, but are they buying enough? How are they doing it? Are they raising money? Are people is it easy for them to continue doing this? Are people, could you explain that? Because I think if this is sustainable, there's no place else for uranium prices to go but up.
Yeah. So let's kind of cover a couple of, let's say, foundational pieces of information here, right? Mm-hmm. To get our head wrapped around this whole thing. Number one is for investors, I think, to understand what an equity at the market program is. And Frank, I don't know if you've talked about it on your podcast in the past, but in a quick nutshell, really, this is actually an innovative concept and a very low cost way for larger companies. And it was really founded in the US as a platform for raising capital, where instead of a traditional offering where a big company comes out and basically does an overnight deal or basically and does a financing that takes weeks and weeks to complete and pays 5-6% commission on it. With an at the market equity program, you're able to basically sell shares on a daily basis, the company, and your selling agent is basically selling those shares into the market and raising cash for you. And so what the Sprott Uranium Trust is doing, so I don't want people to get confused, you're not going to be able to call them up and say, I want to buy shares from you because you're selling shares. Their selling agent is simply executing that for them in the market. So you and I will never see it. We'll get to see it the next time they update their shares outstanding and their holdings. But what we do know is that they look at their share price, and their share price, because their business is to buy and hold uranium, their share price reflects a certain price of uranium. So it's the market value of their company represented by their share price divided by how many pounds they hold in inventory. So you might look at their share price and see that their share price reflects a uranium price of, let's just say, as of even right now as we speak, they're reflecting a price of $36 per pound. You and I just said the spot uranium price is at $35 per pound, a 6-year high. But the Sprott shares are telling you that they're trading at a premium to even today's 6-year high. So what the Sprott guys are most likely doing, and this is what they've given guidance to the market, is that if they're trading at a premium to the spot market, they're going to probably be issuing stock under their ATM arrangement and raise money, which means as you and I speak, there's a chance that they are issuing more stock to buy more uranium tomorrow, almost giving us a guaranteed bid in tomorrow morning's spot market. This is so that's one end of kind of just getting our head wrapped around it. Now, let's just bring it back to another thing. What does it mean to show up every day and buy a couple of 100,000 pounds of uranium? Take one reactor, and there's 94 reactors in the US alone, 440 reactors in the world. But just the 94 reactors in the US, one reactor consumes around 500,000 pounds of uranium annually. Okay, that's its lunch. That's what it needs to consume to generate electricity. If Sprott is buying 500,000 pounds a week, they're eating someone's lunch every week. If they start buying 300,000 pounds a day, they're, every couple of days, they're eating one nuclear reactor's lunch. At some point, the utilities, the ultimate end users of uranium, I believe, are going to wake up and say, geez, we can't allow these guys over here to just keep buying uranium on a daily basis. They're eating our lunch. They're storing it away. We're never going to see that again. We're not going to see the prices of the low $30 per pound environment. And what's fascinating is in today's $35 price that we started the interview with, we're not seeing really any participation by utilities in the market. They're still either on their summer vacation, or they're getting, maybe they're just dazed and confused by how quickly this market is moving. You're talking about a market globally that consumes almost 200 million pounds per year for running nuclear fleet. And the US alone is 50 million pounds per year. We're not mining enough uranium globally to meet that demand. Like in the US, we mine no uranium. production globally is 125 million pounds per year. So it falls way short of where demand is. And so while this Sprott Physical Uranium Trust is an excellent new development that gives us day-to-day price discovery in what was otherwise a very opaque physical market, it's dropping kind of just it's peanuts in the grand scheme of the bigger demand that the power plants are going to have to actually buy uranium to run their fleet to generate emission-free electricity. And Frank, I covered a lot of stuff there, so feel free to come back and peel it apart if you like on the ATM or on reactors, etc.
No, it was great explaining that the at-the-market offering. I think that definitely educated a lot of people to understanding it's not a traditional private placement and they're buying physical uranium. But what I want to get into is you have been in this industry for most of your career. I think, and you correct me on this, 2004 to 2005 is when you started Uranium Energy, I believe.
Yeah,
and
that's right.
You've lived through boom and bust, right? You lived through the boom going into Fukushima and then that huge bust. Going into Fukushima, the biggest negative I saw in this industry, and I am heavily invested in this industry. It's one of the industries I am. Gold, I'm spread out, diversified in stocks and everything. A lot of people are all in this industry. But one of the things, and one of the reasons why I haven't even got more aggressive is the electricity companies, right? That's where you're going to see demand come from. When did you see that demand start coming in? Was it this late during the last cycle pre-Fukushima? And why are they so late to the party? Because I think what I like, and the reason why I want to have you, this is forcing their hand. As prices going higher, they're talking to, their CFOs going, holy shit, we need to do something right away. So when did it take place? Were they late to the party last time? Is this normal because once you see that turn, that's where this industry is just going to boom because these guys, they have to load up on this. I mean, this is how they power their plants and everything. But, just take us through the last cycle and why they're late to the party, if they were late to the party, and when do you think that they're going to start coming in and the prices are going higher?
There certainly have been late to the party in the last two boom cycles, no doubt about it. And the reason we know that is because for years after those boom cycles came off because of Fukushima, et cetera, for years they were complaining about having signed contracts at higher prices. So if you recall, for example, the big North American uranium producer Cameco for the longest time was talking about how they had $50 contracts. So in 2015, when the uranium, or 2016, when the spot uranium price hit $17 per pound, Cameco was selling uranium to utilities at $50 per pound. Why? Because those contracts had been signed in 2010, when uranium price was approaching 50 and went to 60 and eventually 70. So we know for sure that utilities tend to be late to the party. We know in 06, 07, they signed contract. We know this because Tokyo Electric Power, for example, had a lawsuit with Cameco. Why? Because they signed to buy uranium from them at $90 per pound in the 06, 07 run up. So we know that the utilities do this. We know that in 06, for example, when the uranium price was at $25, $30, $40 per pound, utilities were nowhere to be seen. And then they show up, and that's what drove the price from $40 per pound to $140 per pound. So now, why? Why do they behave this way? Number one, you got to remember, these are utilities are big companies, and they're not nimble. They're not like you and I. We speak yesterday. Hey, Amir, can you make time tomorrow? Get on this podcast, make things happen. Let's go. No, you're talking about big companies. You're talking about Duke Power. You're talking about Exelon. You're talking about national companies. In China, the business of buying uranium, it's all state-owned. In Russia, it's all state-owned. You come on, now you're telling me that state-owned bureaucrats and government employees are going to move as fast as the private sector? Never. Not in any industry, and so certainly not in buying physical uranium either. One other point, though. The cost for a pound of uranium makes almost a negligible cost to the overall operating cost of an existing nuclear power plant. Arguably less than 5% of the overall cost. So you could argue that the other reason why maybe they don't care for being late at the party is because they're not price sensitive. So it's not a case that they're just, let's say, are lazy and stupid. No, they're intelligent people. They know what they're doing. Maybe they're slow because it's a government company, but ultimately, I can tell you when uranium hit $140 per pound, no one was reading articles in the US newspaper about their electricity bill going up from nuclear power plants. It would be a very different story if the price of gas doubled or tripled, because in gas-fired power plants or in the fuel cost is almost half of the overall cost of the running the plant. Not the case in the nuclear reactor, and that I think that that low-cost feature of the fuel in running a reactor is a very bullish part of the story for me. Always was, because I think at the end of the day, a nuclear reactor will buy whatever they need to buy to make sure they don't run out of uranium. And you can't run out of uranium because it's way more costly to shut down an existing nuclear reactor. And there's no substitute for the fuel. You can't put zinc or silver in a nuclear reactor. It's got to be uranium-based fuel that goes through the fuel cycle. That to me is really an important part of why the bull thesis has a lot of room to run.
You know, the 5% is interesting because it's 5% of cost now, but as prices go higher, especially if they go much higher from here, because we're looking at this so differently, right? It's funny how sentiment changes, because when we broke through 30, we were like, wow, we broke through 30, right? And we're looking at well over $100 per pound prices. But as this goes up, right? I mean, you could easily double from here, and you could still, and it's not going to be an inflated market, right? Because we've been there before. I mean, these guys say, you know, whatever, $50, $55 operating costs. But anyway, the costs are going to go high for electricity companies, and that's going to eat into margins, which I think kind of forces their hand even more, right?
Yeah, and I mean, look, in terms of, let's say, the kind of upside runway that we have in the price. I mean, for example, look at most commodities, right? And you even look at gold that's pulled back year over year. It's off maybe 10% from its all-time high, and it doesn't even get used up for anything, right? Uranium is at 1/3 of its all-time high. It's at half of the incentive price globally to actually build new uranium mines. And it makes up a very small percentage of the operating cost of a reactor. So this thing's got a lot of way to go, in my opinion, from 35. And even if it goes from 35 to 70, which is exactly where we were when Fukushima happened in March of 2011, do you think by a flick of a switch, new uranium mines are going to come on? We've had the longest bear market in any commodity over the last decade in uranium. I can tell you right now, there isn't any major uranium mine under construction, which is actually a big difference between this early innings of this bull market versus 06. In 06, we had a fantastic bull market in uranium that started in 06 and went through 07. But at that time, there was a deposit called Cigar Lake that was under construction, you know, looking to come in. It had some delays, but it was being built. Today, there's not a single game changer of a deposit under construction anywhere in the world. The closest thing that you get to standby projects that are permitted, ready to go, are the projects that my company, Uranium Energy, has in the US and Texas and Wyoming. But our projects are just the perfect size to really cater to the US market, right? We're looking at producing, or we have a permitted sort of profile of up to 4 million pounds per year right now before any further growth. The US consumes 50 million pounds per year. The world consumes almost 200 million pounds per year. So we're as close as it gets to a company in terms of having production-ready, fully permitted projects that can come online the fastest. And that's not going to solve the world's structural deficit when it comes to uranium. So coming back, yes, there's runway here to get to 70. We get to $70. That's a double from today's levels. And again, what happens? We're just back to where we were basically a decade ago when Fukushima happened. At that $70 per pound, we're still our half of the all-time high of $140 per pound. I don't know of any other commodity that has this kind of setup, and is also being consumed on a year in and year in basis to generate the one thing that we need more of any other time before: electricity. I guess, you know, the case for nuclear power and uranium is a very fundamental one.
It's fundamental. And for me, when I was looking at this industry, and it was electricity companies, which you address, and why I think they're going to stop purchasing. But the other thing is also sentiment. I mean, we've seen what the ESG movement can do to Exxon, where, you know, someone owning this much of a stake was able to convince, you know, the trillion-dollar companies that have trillions of the management to actually vote for them to change the structure of the largest oil company in the world. We see how powerful that group is. This is considered green, carbon friendly. You have some amazing ties in Washington to the point where, Spencer Abraham, is chairman of UEC. I mean, just former Secretary of Energy. What are you seeing in sentiment in terms of there? Because that was a big thing at Fukushima. Everyone's like, we don't, Japan shut everything off. Everybody shut everything off. And, everyone thinks it's going to be like this massive event taking place and everyone's scared of it. What is sentiment right now? I mean, is that ESG movement enough to push us over? Do people feel more comfortable about it? And then you're seeing electricity demand go through the roof, whatever, if you're looking at more data is being stored than ever, guys. Holy cow. If you look at the servers, the amount of servers, people talk about Bitcoin, which is this much, but the amount of electricity continues to go higher and higher and higher. And this seems like the most logical choice, but it all comes down to sentiment. To me, I feel the sentiment changing where people are going, okay, you know what? We need more uranium and nuclear. Are you seeing that with your contacts are very, very big in this industry?
Well, first of all, there's the contacts. So you're talking about, for example, the chairman of our company, Spencer Abraham, who's a former U.S. Energy Secretary. That is a very unique vantage point and set of experience and relations that Spence brings to us, and that allows us to see certain things, both in terms of policy in Washington, D.C., which I can tell you today is the best setup for nuclear power and uranium from a policy point of view because there's bipartisan support. There's no bickering between Democrats, Republicans over the fact that nuclear power needs to be supported. Major amount of component for it in the latest stimulus bill for reactors in the U.S. And for the first time since the Eisenhower administration, the United States government wants to purchase physical uranium for a national strategic reserve. So it's historic that not only is the bipartisan support unique and advantageous because you get the full support of government and policymakers, but we haven't had this type of setup in a long time. We're talking decades. We certainly didn't have this setup in the bull market of 06, 07. In 06, 07, the United States government was selling uranium from their stockpiles. Now they're looking to buy uranium from now and over the next decade. And the support for nuclear power, where everyone basically agrees that it is paramount that if we're going to meet these net zero pledges and targets by 2035 or 2050, you must have nuclear power in the mix. Now, a couple of other things. Perspective. Look, whether you like Tesla or Elon Musk or not, he's done something to the idea of electric vehicles where not every car maker on earth is talking about building more electric vehicles, right? In 06, when we had that bull market, Frank, Tesla as a company was a year old. We were still very much focused on the internal combustion engine for getting us around. The movement that we have now in EVs and electric vehicles was nowhere near what it is today, meaning, again, greater importance being placed by a whole other sector in terms of demand and need for electricity. You talked about Bitcoin and cryptocurrencies. They consume a boatload of electricity. We puts more pressure on it. Bill Gates wrote this huge best-selling book about the environment and his experience with it. That changed people's attitudes towards nuclear power because he concluded we needed nuclear power. And he's putting his own money behind a company called Terra Power that he founded that's now building small modular reactors. He's teamed up with his buddy Warren Buffett to build a small modular reactor in Wyoming. This is all, these developments are so much more powerful than me as a uranium mining executive coming and telling people nuclear is green. We need more uranium. We got to get on board. No, you got governments behind it. You got these net zero pledges by every major government already, and including the European Union, which we didn't have before. You have the EV movement. You put all of that together, right? And I think we are now being driven in a certain direction of growth when it comes to nuclear power. And then obviously as nuclear power grows, so does demand for uranium. And that pull is more powerful than I have seen in my 16 years in this industry because it's coming from so many different places: policy, government, other sectors, other entrepreneurs, billionaires committing capital, not just talking about it, but taking action.
Actually, yeah, just wrote down that quote too. More pulls more in your 16-year history, and talk about that because You've been positioning yourself, and I've always said your work ethic is second to none. You were incredible. You're also a good friend. That's not why I recommended your companies in the past. I went to go visit the Hobson plant. I spent a lot of time with you. But just to say, I always said I wish you were into other industries other than gold and uranium, because it was so depressed for so long. And I believe gold's going to take off, which you're well positioned for. But these two companies talk about, I mean, just really quick, you mentioned UEC, how you're positioned here, and then I'd like to get into uranium royalty, which is very exciting and something that, I'm an investor in. But Uranium Energy, UEC, your president, CEO, Uranium Royalty, your chairman and director. So you are fully engulfed in this. You're all in. I could see how much you spent your entire life doing this, and now to see these trends really turning. Why don't you just give us a little bit of a brief description of what UEC is about, and then get into Uranium Royalty, because those are two companies I think they're going to want to know how to play this, and these are two great ways to play this boom that I think is inevitable, and it's here. It's not something that's going to take a long time. So,
these are what I'm realizing now, and I was very young when I started Uranium Energy. I was, and I also became a parent around the same time. So I guess what I'm realizing, Frank, is that being in the uranium business is a lot like being a parent. You got to have a very long-term approach, from birth until these kids grow up and get going. It could take a long time. So I think that's the first thing I would highlight, is that really the competitive advantage of any current uranium company, including UEC, that has survived the last decade of, again, one of the longest bear markets in any commodity, is that you've got a competitive advantage. What have we been doing for the last decade when this sector was hated and out of favor? We were buying assets for 10 cents on the dollar, maybe 5 cents on the dollar. We were permitting. It takes 7 to 10 years to get the permits to mine uranium in the US. We've gotten permits for 4 of our projects, 3 in Texas, 1 in Wyoming, to actually be able to produce uranium. We have a processing plant, and there hasn't been a new processing plant built in the U.S. in the last decade. We have the people, not just the chairman of our company, who's a former energy secretary, but Scott Melby, who's the president of the Uranium Producers of America, a technical team that's built and operated uranium mines for decades. So Uranium Energy is today the premier U.S. uranium mining company. We have more projects permitted for production than any other company in the U.S. We have the largest pre-construction permitted uranium mine, Reno Creek in Wyoming. Our portfolio has over 100 million pounds of 43101 compliant resources in the ground. But our balance sheet is also a very uranium-centric balance sheet. What do I mean by that? We have over $115 million in cash and physical uranium and uranium equity holdings that we have in Uranium Royalty, which allows me to segue to that in a second. But before I go there, we've really put our money where our mouth is, both as a company and as an individual. I'm a top 5 largest shareholder of the company. Spence and I are both large shareholders of the company. When you pull up Bloomberg and you look at our top holders, you see names like BlackRock, Fidelity, the Sprott organization, our mutual good friend, Marin Katusa. We've really attracted some of the best investors you can ask for in terms of brand recognition and large holders, but also commodity-focused investors, people like Rick Rule, people like Warren Gilman. But you also see management amongst these well-known investors, amongst the top holders of the company. So we're totally aligned in that sense. Our physical uranium initiative, we started it when uranium was at $27 per pound earlier this year. And we said, you know what? I think the price of uranium as a commodity is going to go up way more than cash itself, considering all the debasement of fiat currencies we're seeing out there. We can buy physical uranium and store it for less than the prevailing mining cost in the world. And so we instituted a physical uranium program. We started buying and storing physical uranium on U.S. soil. And that is part of our $115 million of holdings on our balance sheet. And you're talking about a company that's over the next 12 months going to spend about $12 million. So what I mean is our balance sheet is very strong compared to what our expenditures are, given that currently we're not producing uranium yet. But the moment we get to $50 uranium, we have the ability to turn on an existing mine. We were a uranium miner before we shut that mining operation down. But what we've really done over the last decade is, again, go out there, build our portfolio, build our platform. Frank, the past decade wasn't about mining uranium at prices well below marginal cost of production. It was about buying assets. So UEC has bought the assets, we've bought the physical uranium, and heck, we've even launched a uranium royalty company, which is the first and only company applying the royalty and streaming model exclusively to the uranium sector. And Uranium Energy is the largest shareholder in uranium royalty. We own 18% of that. I'm also the chairman of that company, obviously as the largest shareholder there, Uranium Energy. We're involved. I want to make sure that company does well. That company earlier this year listed on the NASDAQ. I think we're also the only NASDAQ listed uranium company. And we have royalties on a portfolio of assets, including two of the biggest uranium mines in the world called Cigar Lake and McArthur River in Canada, owned and operated jointly by Cameco and Orano. We have physical uranium. We have a 10-year supply agreement with Kazatomprom, the world's largest uranium producer out of Kazakhstan. We have a very small team, very small G&A. I think the company is spending, less than $1 million a year to operate, has over $70 million of cash and marketable securities, very strong balance sheet. And what you love about a royalty company and what we love about a royalty company is exactly that, Frank. Very small G&A. These companies don't go out there, royalty companies, we don't go out there and spend money on exploration and development. That's not our business. We don't own these assets. We simply have a royalty, which is an agreement whereby a predefined percentage of future revenues are paid out to us. So direct exposure to the commodity price, direct exposure to top line, almost a hedge against inflation. To your point, if there's inflationary pressures that drives costs higher, we're not exposed to that. We're exposed to top line and with revenue. I really love the royalty model. As you know, I'm involved with two royalty companies that I've founded, one uranium royalty, one gold royalty in the precious metal space. And I think investors, when you look at where these royalty companies trade, they typically trade at much better multiples of net asset value than the miners do and the exploration companies do. And it's really, I think, the simplicity of the business. It's a diversified business, and you don't have all the headache that goes with actually building and operating the mines themselves.
Well, I could tell you one thing. This interview, I try to keep to 30 minutes. I think we're going a little long here because it is so interesting, right? And just to see where everything is coming together right now for you, from being your friend, I'm proud. I see how hard you work. I think that shows great character because, being in a tough industry for such a long time, you're not someone that complains about it ever. You position yourself as best possible for when this thing comes back. Now you've seen it come back. You're well positioned, and I'm really happy for you, man. I'm really happy for you. But I'm very bullish on this to the point where I'm going to be adding to my positions because I think there's definitely a change in the environment, and this thing's really going to go now.
Thank you, Frank. I really appreciate that. And I know you've been on this journey with me as well. We've been to Hobson together. You've seen what we have down there. And yeah, I think ultimately this feels different this time, for sure.
It definitely does. Okay, now before you go, could you give me, how's it going out there? Could you give me one of those? The way you do it when I call you, though. Every time I call, listen, he makes fun of me.
When I go for a run or any kind of exercise, I like to multitask. And as you know, my favorite thing to listen to are your podcasts because my head is so focused on uranium and gold and commodities. And I love that on your podcast, you cover a variety of sectors and industries. I actually don't know how you do that in terms of just knowing so much about so many different things. But I love the intro, right? Where it's all about, hey, how's it going out there?
And you know how it's easy? It makes it easy to cover all those industries because we have great contacts like you across all industries that really help us out, that come here to educate our investors. And I know how busy you are. You travel the world. You're always busy, and you always find time for the podcast. And I know my listeners really appreciate it. So thanks so much for coming on at such short notice. And I'll talk to you soon, bud.
Thank you, Frank.